No one, everybody, get me out of tech. Let's buy oil. Let's buy this and that. Like, people are not thinking about businesses, or thinking about factors.
Today, folks, Barry Schwartz. I've never really heard of this guy until I listened to him this morning on BNN, and he gave some incredible stock picks, 3 stock picks for June. So we're going to listen to those, analyze them a little bit, and then I'm going to share with you my 2 top stock picks for June. So take a listen and we'll recap.
Stock was way too expensive. It finally dropped to around 25 times earnings, 4% free cash flow yield. And we said, oh my God, we can buy one of the top 5 greatest businesses the world has ever seen at a very inexpensive multiple here. So Adobe, for those who don't know, it's Creative Cloud is the subscription-based software that it sells. This is an irreplaceable asset. 40 million users, potential users of it, to make marketing materials, video games, rendering. Everybody's a creator now, YouTube, TikTok, whatever. And it's not something that you can learn in one day. You go to school for it. There's large community groups for it. And why it's such a great business is the Creative Cloud, I think, has about 90+% gross margins, costs them nothing to bring on a new customer, and there's untapped pricing power. I think it charges $50 US a month, potential for that to go a lot higher over the long term. So here we go.
Now, I think this is a no-brainer here. It's kind of underlooked in the tech sector right now. It is underperforming year to date, but on a 5-year basis is still like well over doubling the S&P 500's performance. And when we kind of dive down into that free cash flow, not only has this company done a phenomenal job at growing that free cash flow, but when you take a look at their balance sheet, guys, they've done a great job not taking on nearly as much debt here. If we take a look at the total assets versus liabilities, I mean, their asset base has been growing drastically against the liabilities they've been taking on. So this company has a numero uno pick that hasn't missed a single earnings estimate this year and continues to grow quarter over quarter. I give that one a thumbs up. So let's listen to numero dos.
Visa is one of, I think, a third of its business went away because of COVID, right? The travel and cross-border spending. We're back, baby. Maybe not so much in Asia, but that's just free money for Visa. And I'm super excited that the world is reopening and people are traveling. Then we should recover all the losses that we had pre-pandemic. Visa has a good sight line, by the way, to the economy right now. It says there's no recession whatsoever. That could change, of course. And so still structural tailwinds to the digital economy, people not using cash, but making purchases with their Visa cards. And, chances are, if you're spending money anywhere around the world, you're either using a Visa or MasterCard. So we want to own that stock.
Visa card. Visa and MasterCard, the only thing when I think about these stocks is going back a year ago with Chamath Palihapitiya when he was saying the greatest thing you can do right now is short Visa, short MasterCard, and go buy altcoins that disrupt the payment systems. And though I think over the long term, crypto is going to take over some of the payment gateways, the fact of the matter is Visa, MasterCard have moats. These things are like duopolies together here, guys. And they're basically, if crypto takes off, they'll just adopt those blockchain systems. It's really hard to get consumers to change their purchasing at gas stations. I got my Visa, MasterCards on my corporate account, personal account, line of credit accounts. I use all Visa basically and MasterCard. I just don't see that changing anytime soon. Now, I'm not buying this stock, but I can see why he would be buying it. A 5-year basis, outperforming the S&P 500, and even on a year-to-date basis, still outperforming the basic indices. So let's take a look at the third one, and then we'll kick off with my picks.
A Canadian financial stock, National Bank.
I was so surprised, Andy, at the results from National Bank. It essentially had no loan losses in the quarter, the best revenue growth of any of the Canadian banks in Q2. The dividend is still way too low. I think the payout ratio is only 30%. They've got this asset in Cambodia that's doing amazing. That could be good or bad any way you look at it. But this is a jewel of a Canadian bank. They've got great exposure to wealth management. They own NBIN, which is the custody business, which assets under administration of $200+ billion. So very well-run business, low multiple on this Canadian bank. I'm not worried about a recession. And I think just National is the best Canadian bank to own. It's one that we've owned since 2002, 2003, and we'll continue to buy it for new clients and clients that give us more money.
Oh man, I've always described banks as like Pokemon cards. You just got to collect them all. And National Bank is one that I've definitely overlooked and has been a major outperformer against a lot of them. On a 5-year basis, it's outperforming the S&P 500. On a year-to-date basis, it's outperforming the S&P 500. You get a better dividend, an incredible valuation even against the S&P and the TSX. I mean, it's one of the lowest PE ratioed banks right now. So I can see his ideals with this, but I wouldn't just pick one Canadian bank. You know, if Royal Bank dips heavily, even though this one's underpaced the market, I would just collect that one. Bank of Nova Scotia, Canadian Imperial Bank, BMO. I mean, just if you buy a bank ETF here in Canada, there's really only several banks that sit in that, so you might as well just buy them individually and continually collect that cash flow. Most people are unaware that the Canadian banks are world renowned. They have outperformed through every recession against even the US counterparts, and these will always be a major proponent of my portfolio, but always recommended don't make any individual sector more than 20%, something Kevin O'Leary always says. So I love those banks. So let's just kind of talk about the stocks that I already own these stocks. So what am I looking at? Because I'm not really looking to buy Adobe or Visa, but there's one pick I can't get out of my mind. I've been drooling over it literally for the last month now, and since I've sold it really, and that's been Google. Google, amongst all the S&P top 10 tech companies right now, has some of the strongest free cash flow growth, and even over something like Facebook, which I do love Facebook, but the problem is Facebook's kind of like a user experience that's kind of more dedicated toward boomers right now as people move into TikTok. And, you know, they have the metaverse upsides. I still love Facebook, but the thing with Google, guys, is they own search. They literally own the search traffic. If you need to learn something, you Google it. That value alone, I think, makes up the worth of what you're paying for this company today, let alone that on top of that, you're getting exposure to self-driving. I mean, you're talking about analytics, which we recently saw used in the Johnny Depp case here, guys. We're talking about genomic editing and AI with the healthcare system. This company is like a diversified, you know, broad sector-based ETF almost, and I'm going to be adding it back. It has over a 5-year basis again still outperformed, but year to date has just been getting clobbered. It has been rallying back, and I keep telling you guys, these are the opportunities. Now is the time to be buying. I'd get it, that bear market BS out of your head, and even if the markets dip here, you're getting a good value on this stock. I would pick it over Amazon. I'd pick it over Tesla right now. I mean, I just don't think you can go wrong with Google. Again, look at the free cash flow growth here, guys. It's absolutely absurd, over doubling in the last couple of years. Now, could it slow down? Could they get hit on advertising? Absolutely. But unlike Facebook, they could get harder hit on advertising. This is a search platform for knowledge. It's like the global library, like Timbuktu. People would have to travel all the way to Africa, around the world, to get access to information that Google's allowing you. And that moat is insane, right? So they did miss on the last Q1 estimate, and I'm hoping they actually trend down lower before the stock split, because I think once that stock split comes and a lot of this FUD in the market kind of surpasses us, I'm a gung-ho for this stuff here, right? Now, finally, this is going to be very dependent on whether you think a recession's coming or not. I know they mentioned it in there. A lot of people are divisive of whether we're already in a recession, whether we're going to see one at all. Kevin O'Leary's debated this, as I've mentioned far too many times in my last few videos, but I am seriously debating on adding the TQQQ ETF. Now, my family's been more proponented to things like QQQM, and I don't personally own any of the Qs. I've primarily just been buying VOO, the S&P 500 index. I'll continue to do that. That's a boring stock pick, so I didn't want to bring it up in this one, but I talked about this triple leveraged ETF, and if you get the feeling I get, and again, I could be wrong, so don't take this as financial advice, but I'm getting the vibe that we are nearing the bottoms of this market. Everyone's running around with their heads chopped off. There's blood on the street, and I'm looking at companies like Google, like Facebook, like Amazon. You know, I still think Microsoft, Apple could be considered a little overvalued, but a lot of these companies, even Adobe, PayPal, are all sitting in this triple leveraged ETF here, guys. And I'm starting to get, my mouth is drooling here, and I'm like, you know, I could throw a couple thousand bucks at this month and just forget about it and come back in a little bit, because on a long year basis, even though the volatility is insane, it always seems to outperform the market. And there's a lot of debate around, you know, triple leveraged ETFs, even if it's an S&P 500 ETF over the long term. And I want to ask you what you think about that in the comments section below, and what your stock picks are this month. I am just finishing up corporate taxes. I'm hoping to have a little bit of capital left over, and I'm allocating it toward 3 positions. Very obviously VOO, Google, and I'm looking into perhaps buying this TQQ. It just had a little hint, a little spice on top of the cherry on top of the cake, right? So in light of this, stay cool, stay awesome, and as always, I look forward to catching you in the next one.